Bitcoin is on the verge of a major milestone. As of May 8, 2025, the cryptocurrency is trading at $98,750. This represents a 4.2% increase in just the last 24 hours. The recent surge has ignited excitement among investors. Many are wondering if Bitcoin will finally break the coveted $100,000 barrier today. This momentum is reflected in the trading volumes across major exchanges. Binance, a leading cryptocurrency exchange, has seen its BTC/USD trading volume spike by 35%. This surge in volume translates to a massive $12.4 billion traded in the past 12 hours. Other exchanges like Kraken and Coinbase have also experienced a significant increase in Bitcoin trading activity. This widespread surge in volume underscores the strong market participation and bullish sentiment surrounding Bitcoin. The recent price surge isn't just a blip on the radar, it's driven by a confluence of factors, including positive on-chain metrics and growing institutional interest. These factors suggest that the current momentum might be sustainable. The possibility of Bitcoin finally breaking $100,000 has captured the attention of both seasoned investors and newcomers alike. The optimism surrounding Bitcoin is not solely based on price speculation. On-chain data, which provides insights into the underlying network activity, paints a bullish picture. There has been a notable increase in the number of Bitcoin wallet addresses holding a significant amount of Bitcoin. Specifically, addresses holding 1 Bitcoin or more have increased by 15% since the beginning of May. This suggests that larger players, often referred to as whales, are accumulating Bitcoin. Institutional interest in Bitcoin continues to grow, further fueling the bullish sentiment. Grayscale, a leading digital asset management firm, reported $320 million in net inflows to its Bitcoin Trust, GBTC, on May 7. This indicates strong demand from institutional investors seeking exposure to Bitcoin. Exchange-traded funds, ETFs, focused on Bitcoin, have also seen a surge in volume, with a 25% increase week over week, reaching $2.1 billion as of May 7. This influx of institutional capital is a significant development for the Bitcoin market. Institutions typically have a long-term investment horizon and operate with substantial capital. Their involvement lends credibility to Bitcoin as an asset class and contributes to its price stability. As more institutions add Bitcoin to their portfolios, the market cap of Bitcoin expands, potentially pushing the price higher. Interestingly, Bitcoin's recent surge coincides with a period of positive performance in the traditional stock market. The S&P 500, a benchmark index for the U.S. stock market, gained 1.8% on May 7. Similarly, Nasdaq futures, which track the tech-heavy Nasdaq Composite Index, are up 0.9% as of May 8. This correlation suggests a risk-on appetite among investors. The correlation between Bitcoin and the stock market, particularly the tech-heavy Nasdaq, has become increasingly apparent. This correlation is reflected in Bitcoin's 30-day correlation coefficient with the S&P 500, which currently stands at 0.78. This positive correlation suggests that investors are increasingly viewing Bitcoin as a risk asset, similar to stocks. This positive sentiment in the broader market is spilling over into the cryptocurrency space, boosting investor confidence. As investors become more comfortable with risk, they are more likely to allocate capital to assets like Bitcoin, which are perceived as higher risk but potentially higher reward. This interconnectedness between traditional and crypto markets highlights the growing influence of digital assets on the global financial landscape. Technical indicators provide further insight into Bitcoin's potential price trajectory. The Relative Strength Index, RSI, a momentum oscillator, is currently at 68 for the BTC-USD pair on the 4-hour chart. This reading suggests that Bitcoin is approaching overbought territory. However, the 50-day moving average, a widely followed technical indicator, stands at $92,500, providing a level of support. The $100,000 mark remains a significant psychological resistance level. Breaking through this barrier could trigger a wave of buying activity fueled by fear of missing out, or FOMO. Such a breakout could propel Bitcoin towards $105,000, a key Fibonacci extension level. However, failure to break through $100,000 could lead to profit-taking, potentially pushing the price down to the $95,000 support level. The impact of Bitcoin's price movements on other cryptocurrencies, often referred to as altcoins, is undeniable. Ethereum, the second largest cryptocurrency, has mirrored Bitcoin's gains, rising 3.8% to $3,450. Solana, another prominent altcoin, has surged even higher, up 5.1% to $180. This positive correlation highlights Bitcoin's continued dominance in the cryptocurrency market. While Bitcoin's price hovers tantalizingly close to the historic $100,000 mark, the cryptocurrency market remains inherently volatile. Predicting whether Bitcoin will hit this milestone today is impossible. However, the confluence of positive factors, including strong market momentum, institutional interest, and favorable technical indicators, suggests that Bitcoin is well positioned for further growth. Whether it's today or in the near future, the $100,000 mark seems to be within Bitcoin's reach.